partner Geotus, bronze partner Hiobi Global. Now, I would like to introduce you to Mr. Avinash Shekhar, co-CEO Zebpay. Without any further ado, I would like to hand over the reins to Mr. Shekhar to warmly welcome Mr. Jayant Sinha, Member of Parliament and Chairman of Standing Committee on Finance, to have a fireside chat with him on innovation and governance. Over to you, Mr. Shekhar. Please welcome, sir, and then sir will give a speech.
Thanks, Steve. So it's my honor to welcome Mr. Jayant Sinha. He is a member of Parliament from Hazaribagh, Jharkhand, and chairperson of Standing Committee on Finance. Earlier, he was State Minister for Finance and Civil Aviation. Formerly a venture capitalist, he is an investment banker turned politician. Mr. Sinha studied in IIT Delhi, in University of Pennsylvania, and did his MBA from Harvard Business School. He spent 12 years in McKinsey as a partner and co-led global software and IT service practice. It's heartening to see that a professional from business world has entered into politics. I again welcome Mr. Sinha to address us.
Thank you very much, Avinash, and a very good afternoon to all participants in this crypto assets conference organized by IAMAI. It's wonderful to be with all of you this afternoon and to talk about the trends and potential for crypto assets in India, and of course to also observe what is happening globally and the implications it has for India as well. We all know that crypto assets and what's happening in the crypto finance space is both very, very substantial as well as very significant for the future as well. By some estimates, I'm told from members of this industry that there may be 10 or 15 million people in India that are transacting in these crypto assets, and that the outstanding face value of these assets in India is somewhere in the billions of dollars now. So since this has clearly become an important asset class in India and has attracted a great deal of interest, it's important for us to take a step back and reflect on how India should participate in crypto finance going forward. And I'll spend a few minutes talking about that and generally how policymakers look at financial innovation. And of course, you know where the legislation around crypto is right now in India, but I'll spend a little bit of time talking about that, and then I'll wrap it up, and Avinash can ask questions, and you can also ask me questions about all of this. Now, in general, I will say that regulatory policy and lawmaking for financial systems in India in the last decade or so, and particularly under Honorable Prime Minister Shri Narendra Modi ji's government, has been very progressive and forward-looking. You all have seen how in the last few years, we have built in some ways the most affordable and most efficient financial payment system in the world. And that, of course, is based on Aadhaar. The foundation is Aadhaar. And with the digital KYC and the streamlined identification system that is provided by Aadhaar, we have been able to really develop the India stack through some excellent work that's been done by RBI, by the Ministry of Finance, by the National Payments Clearing House. And as a result of that, the entire India stack with UPI, with transactions across banks has become very efficient and very seamless. And that has really brought down the cost of digitally transacting in India, and really opened up the financial sector dramatically for people in India. The combination of low-cost accounts, that is Jan Dhan, with Aadhaar and mobile phones, the famous JAM Trinity, has reduced leakage in government programs and made it possible for us to target every single individual in India and provide them the benefits and the support that they require. The Honorable Prime Minister also just recently introduced e-Rupee, which is another outstanding digital product, which enables digital vouchers to be handed directly to individuals for a particular purpose. So if you want to give people a subsidy to be able to go study in a university or to go and buy food from the PDS store, we can really target it using the e-rupee framework. And this is, of course, as I said, built on top of India Stack. And therefore, you can see that in the last few years, again, particularly after we rolled out Aadhaar, and that was, as late as 14, 15 that we rolled out Aadhaar. And then, of course, we've built out the whole India stack, particularly, again, encouraged by demonetization and so on. That Indian regulators and policymakers have shown that they really know how to balance stability on the one hand, so that the financial system continues to operate without a glitch, without major theft, without major hacking episodes, and so on, with growth on the other hand. So Indian regulators and policymakers under Honorable Prime Minister Narendra Modi ji's leadership have demonstrated around the world and received great recognition for being able to balance both financial stability as well as growth. That has traditionally been the approach that Indian policymakers and regulators have taken. Now, with that mindset of balancing stability and growth and making it as inclusive as possible, we need to start to look at both crypto assets as well as decentralized finance in general. Now, not just in India, but around the world, crypto assets, decentralized finance, all of these new innovations in financial systems have caused regulators and policymakers to think very carefully about how to ensure protection for consumers and a well regulated, well functioning set of markets associated with these crypto assets. And to date, there hasn't really been a good sort of global standard or a good global framework that has been created, which could be applied to countries around the world, and on the basis of which we could create a well-functioning crypto financing system. So that those global standards have still not evolved, and it's very important, whether it's through the Bank of International Settlements, which is the central bank to the central bankers, whether it's the IMF, World Bank, or any other multilateral financial institution, that there be certain global standards around how crypto assets should be traded, should be valued, should be cleared, settled. All of that we think requires a good convergence of global standards and protocols. And it's these global standards and protocols. SWIFT is just a very small example in that regard. That has made such a big difference to banks being able to interoperate seamlessly across these kinds of digital financial instruments. Now, even as these global standards evolve, friends, the Indian situation will tend to be different. If you have countries that have open currencies, which are open and convertible both on the current account as well as on the capital account, it's much easier for them to let these standards evolve. As far as India is concerned, we have an open trading account, convertible account, but we don't have a convertible capital account. So the current account is open, but the capital account, as you know, is closed, is administered by the RBI through FEMA. So we have a closed capital account, and because we have a closed capital account, we have to be very watchful about what happens with these crypto assets and cryptocurrencies. And that's why what is happening in advanced economies is not easily replicable to India, because we have restrictions in how you can trade foreign currencies in India. Obviously, under the LRS, you are able to remit $250,000 per person per year. So there is a window there. But how this is going to work out has to be really thought through. And then, of course, for India, uniquely among other countries, national security is also a major consideration. And so, obviously, using these kinds of crypto instruments for terror financing and for domestic security threats and all of that also is something that we have to be mindful of and we have to be very careful about. So this is the backdrop. On the one hand, Indian regulators and policymakers have been very progressive, very innovative. On the other hand, crypto is so important, so significant, so substantial in India and globally that we really have to make sure we think this through correctly, that global standards don't necessarily apply directly to India. It's because of all of that we've had a very elaborate set of uh, ideas and discussions around all of these crypto instruments. And that's why, of course, in 2019 we had the white paper. Then, of course, RBI had its ban, which was lifted by the Supreme Court. And now, of course, as you know, that there is a legislation that is being developed by the Ministry of Finance that has been, thought through in quite some detail, and has gone to cabinet for further consideration. Now, the way legislation is done in India, once the cabinet approves that law, then that law will come to parliament. Typically, there will be a discussion in committee on that legislation. And if it does come, then there are two possibilities. One is it can come to the Standing Committee on Finance, which is where I am, and it can be considered and evaluated in the Standing Committee on Finance over a period of time. Alternatively, it's also possible to set up a select committee, especially to look at crypto and to understand crypto. That's also possible. We have a select committee that's looking at the Personal Data Protection Bill, and that's been working for now a couple of years, looking at personal data protection. So those are the two ways in which this legislation can come. Once the legislation has passed through committee and amended as required, then, of course, it goes to both the Lok Sabha and potentially the Rajya Sabha as well. Most likely, it will be both the Lok Sabha and the Rajya Sabha, because this will probably not just be a money bill, but it will be a standard bill that has to be passed in the Lok Sabha and the Rajya Sabha. It will then be brought up for discussion, passed in both houses. And once it's passed in both houses, then it goes to the president for notification. And then it gets released and it becomes the law of the land. So that's the process as far as legislation is concerned. As I said, during this whole process, we have to balance stability and growth, but we recognize how important this whole area of crypto is, and therefore, I'm sure the legislation will reflect all of that. With that, I will end. Avinash, happy to answer any questions you all might pose.
Thanks, Mr. Sinha. Just one comment from my side, that the payment system in India, sir, what I have seen all over the world, I think we have one of the best payment system, which is both from a ease of use point of view and customer protection point of view. I think many of the developed countries also doesn't have this kind of system. Having said that, you said about the need for regulation, and how India is obviously, the regulatory environment in India is different from, let's say, some of the other countries. So in that context, don't you think that it is more important for India to actually take a lead in terms of how to regulate this industry, how to ensure that the industry is transparent, and at the same time innovation is not throttled, innovation continues. So what's your view on that?
No, that's exactly right, Avinash. As I said, in all these cases, whenever we have financial innovation, like, for example, that happened in digital finance and payment systems and so on, the regulators had to balance both stability as well as growth. But we have always been able to walk that tightrope and be able to balance both. And we've done it quite well. And that's why, as you said yourself earlier, we have been able to build some of the world leading financial technology companies and financial platforms as well. And I'm so very confident that even when it comes to crypto instruments, that we will be able to walk that tightrope very well. Now, as I said, again, because India's capital account is closed, though our current account is open in terms of convertibility, the solution for India is not going to be exactly what Japan is doing or what El Salvador is doing, where the dollar is its currency, or what the US can do, where currencies are convertible, fully convertible. So our solution will have to be distinct and unique for India, simply because of our unique circumstances. So it'd be good if we have global standards, and then if there is something above and beyond the global standards that is unique to India, that can also be developed and worked out. And I think, as I laid out, the process of going to cabinet and then to parliament, then the stakeholder consultations and everything else, that should hopefully get us to the point where we will both be able to be aligned with global standards while at the same time being able to deal with the unique Indian circumstances as well.
Thanks. My next question comes basically is that uh, as an industry, what we are looking for is that the government should be formally engaging with us, talking to us, so that we have an open discussion on what are the risks which government sees or what we see, and what are the areas where we see that there is a huge potential for innovation and growth for the country. So wanted to know your views as to at what stage we should be expecting that we'll have a kind of a formal engagement with the government to exchange views.
Avinash, that process is very well understood. As I said, the legislation has gone to cabinet. Cabinet has to approve it, and so we have to wait till that is concluded. That process is a process that is closed to other stakeholders. The government has to go through with that. But once it passes cabinet and then it's brought to parliament, then it becomes an open process, right? And particularly if it goes to any of the committees, then the committees conduct a whole series of hearings and discussions, and those are absolutely in the public domain, in the sense that we invite experts to come in and testify and provide us their perspectives and views and so on. And then on the basis of that input, certain amendments are proposed in the legislation by the committee to the government. Then the government, of course, is free to decide whether they should accept it or not accept it. But that is when, in the parliamentary process, is when the industry can participate fully.
I'll request other participants also, if they have any questions, they can type on the Q&A bar. The next question, sir, is that do you think that this process of lawmaking or like introduction of regulations, it will be more like a iterative process, in the sense that, for example, there are certain things which we think that should be mandated immediately, or should government should give some guidance immediately, rather than waiting for the full process, for example, around KYC. Although as an industry we follow certain KYC processes, uh, but if there is a direction from the government, or there is some kind of guidance from the government, it 1 year, 2 year, 3 years down the line, it will make any recommendation or any new law much more easier if we have a standardized KYC process across the industry. So do you think that there should be some interim guidelines, may not be law, but at least some guidelines from the government side, which the industry can follow?
Avinash, when it comes to rule making and law making, there are many instruments that are available to the government. So one, of course, is legislation itself, which is what I described as the crypto bill, which has gone to cabinet and so on. So that's the legislation itself, which is enabling legislation that sets up the entire framework. Then within that, there are many rules and orders that can be passed. Now, rules are the ones that are passed through the Gazette of India. They also have the force of law because they're in the Gazette, but they don't necessarily require legislative action. Under the principle of subordinate legislation, it is possible for government to issue rules which are much more quickly put together, and there can be good consultation on those rules, and then they are published in the Gazette of India, and you can move on it quite quickly. Then there are orders and circulars also that are possible. RBI often puts out circulars, which is just a guideline or a set of protocols or principles under which matters can be regulated. So those circulars and orders can also be used quite well. So depending on what the issue is and who the regulator is, it's possible to use any of these different kinds of tools and instruments to move policy along. It's not just legislation. So if there's a KYC matter that needs to be dealt with right away, potentially it can be dealt with simply through an RBI circular, for example.
Thanks, sir. Uh, Another question which comes from is basically is that from government side, open source blockchain technology, obviously there's lots of innovations happening there. So has the government thinking about using this technology for let's say more open government, more transparent government, or uh, transparently reaching out to the last man, as we are doing, I think, in some of the other initiatives where we're doing direct transfer of subsidies to the last man. So, what is your view that, I mean, how can government and the private player can participate and in terms of improving the governance, so to say, and improving the transparency, which is, I think, is one of the theme of this government.
Yeah, so there are lots of possibilities, and I think we just have to be patient for first the crypto bill to come through. Once the crypto bill comes through, then we can figure out all these other opportunities as well.
Okay. Any news or any comments you can make on this proposed RBI central bank digital currency?
No, you'll have to wait for RBI on that.
Okay. So I think I don't have any more questions, Shishti.
Sure. Thank you so much, Sinha sir, for such an interesting conversation. Thank you, Mr. Shekhar, for driving it so well. Thank you, audiences, for staying tuned. Have a good day to all of you.
Thanks, Mr. Sinha. Thanks for
Bye
this.
bye. Thank you for
Bye.
Thank
having
you.
me.
Bye, sir.
Bye.